In this video, I want to show you how to set up a simple budget for your business that you're starting. So here we have in this Excel sheet all the different costs like rent, but also equipment, a shop. If you start a shop, there's also security cost, office, utilities, then we have supplies, transportation. You have some lawyers or accountants that you need to pay, and marketing costs, which are most of the time people forget to get those into the cost. And also we have here at the bottom, we have emergencies, savings, goodwill, and savings for taxes. So what we would like to have is on top of all the costs that we have, also develop an emergency fund. So when something happens in your business, you can use the money that you've accumulated on there. So it will be a monthly expense. Same for savings. Savings you can use to grow your business to another level. And goodwill is you can give. You can give towards your community. Then savings for taxes. You have to save also for some income taxes or other taxes. Then we have your salaries, which is an expense to the business, and we have your loan payments. So we have a one-time cost, and which are all the costs to start, but you have monthly expenses, quarterly, and annual. And for some businesses, you also have daily expenses or weekly. So let me show you an example how this looks in real life. So this is an example of a taxi business. These numbers are not real, but it will give you an idea. So there is a one-time cost of a vehicle, number plate, duty. We need to input some chairs. Then there are other expenses. There's marketing expense on the monthly basis, on a daily basis, on a quarterly, and on a per 6 months, and annual cost. So here what we do, we determine loan payments, but here we have savings is 10% of all the total cost above monthly expenses. So you save around 10%. So when you add this all up, you see that the total monthly cost is around this amount. You just add up the one-time cost and you say like this is the daily cost multiplied by the amount of days that you will work, which is in this case 24. Then we have the total monthly cost, then we have the total annual. So we just derive it back to total monthly cost, total one-time cost, and total 3 months cost. So yeah. So then what you do is this amount you will put here into the monthly revenue and monthly expenses. So this is another sheet that we use to determine if our business is going to give us enough sales to cover all the expenses. So let's say here this is for return tariff 24. So here we have some standard numbers that we've come up with based on the sales. And when we see our monthly revenue is about 3.5 million, which is around 5,000 US, and the monthly expenses are around this. So that means there's profit coming into the business. That means this business will work. What's very important is that we need to keep the money in the business. This profit is not yours, and you can use it to expand it and to grow it or to start a new business. So yeah. So yeah, that's about it. So first we start with determining all our costs, daily, monthly, quarterly, per 6 months. Then the total cost per month we move or we transpose here, and in this way with our sales calculation we can see if it's a profitable idea.